All right, now that we've looked at some more valuation models using CAPM, we can now extend this to basically figure out exactly what the value of a company is going to be. Okay, so what we're looking at here is that we're showing a couple things, right? So we are showing a beta of 1.61. We are showing a return on our risk-free rate of 1.71%. We are showing a risk premium, right? Risk premium, not return on the market, risk premium of 3.46%. And we're trying to now figure out what is the current value of this particular stock. We are showing a growth rate of 6% and an expected dividend next year, not this year, but next year, which means that's going to be D1 of $4.88. Okay, so we're going to kind of work this backwards a little bit. We are going to show that we have a P0, the price today, that's what we're trying to figure out, is going to be equal to, remember, D1 divided by R minus G. Okay, we have D1, which is 4.88, and that is divided by, we don't know R yet. That's one of the things we're going to have to figure out. And we know that G is negative 0.06%. Okay, so we need to compute. We need to figure out what this R here is going to be. Okay, we need to figure out what R is. We know that RI is equal to the return on the risk-free rate plus beta multiplied by the risk premium. So we know our risk-free rate is 1.71% plus beta is 1.61%, right? That is a more risky company in the market, so it's going to have a higher return required on it than the overall market. And then we have the risk premium of 3.46%. So that should tell us that our required return on this stock is going to be 7.28%. Okay, so we can now take this return and we can plug it into the Gordon growth model. Okay, so this is going to be 0.0728. So that's going to tell us that our current price, right, is going to be equal to $381.25. Okay, that's a pretty high valuation with a not super high dividend. But the reason being is that it has a really high growth rate here and not really that high of a required return. So there's not much of a difference here. It's it's divided by 0.0128, so it's going to amplify this number to be pretty large.